Welcome back to the show, everyone. Hope you guys are having a great day. As always, we're going to be going over PayPal stock or revisiting PayPal stock. So let me go ahead and show you guys the older videos. If you want a summary of my older thoughts, was pretty much anything under $70 for PayPal was interesting and prompted me to make that video there that you see PayPal stock finally crashed under $70. Am I buying? Now, keep in mind that throughout this time period, I've been making updates and videos on PayPal stock. There have been plenty of content creators who've been sharing their thoughts on the valuation of PayPal, and some had the price targets or valuation or fair value or anywhere around the mid hundreds to 200, and I think in one case it was 300. And keep in mind that one of the greatest financial content creators of all time and greatest investor of our time, the next Warren Buffett, said it was easy money at around $100-ish a share. I think it was $115 a share. So right now it should be about super crazy easy money because it's almost 50% lower from then, if we're following the same logic there. Oh, if you actually do want, or you know who that person is, you can just pay them $20 a month and actually see their stock picks every month. So you can see the other easy money stocks, right? But anyways, enough of those jokes. We're getting back into the discussion around PayPal, and I'm going to go right into it. So this video is helping myself understand, hey, should I buy PayPal or should I avoid PayPal? Now, for full disclosure, I know that those of you within the Capital Mindset Gold community, you guys already know, hey, you bought PayPal in the holding co and you already sold PayPal. So for full disclosure, I was in PayPal because I know in this video right there, I said I wasn't going to be buying PayPal. I ended up buying PayPal because I have the full right to change my mind. The thesis was it was a valuation play, and I put around 5% of the holding co portfolio in it. I am no longer in it. But now the question is, okay, do I re-enter it now that it's basically come close to back down to that original buy price? Or are there better places to put my capital? And hopefully by the end of this video, I'll help myself understand that and maybe you guys as well. So let's take a look at the price target, or the price points, I should say. You can see that PayPal has had a massive run and hit, I think, right above $300 a share before crashing right back down to 61. Now, I can't for the life of me explain to you why back then people thought the valuation of PayPal belonged anywhere near there. Now, one of the main criticisms I gave on PayPal, which I think in hindsight is what the market more or less adopted, was this narrative of massive competition coming online. And I think back then it was a little bit more foreign than it is today. And the way we can measure massive competition coming online and taking share from PayPal is a slowed growth. We do know that the online payment space is going to be increasing for the next foreseeable future, for decades to come, as people start to shift their payment habits more digitally and online, etc. And so theoretically, PayPal should have a growing TAM. Which they do, except the only difference is there's tons of players coming online. And another criticism I levy towards PayPal is it's in the business that is racing constantly towards the bottom. Now, companies that are private like Stripe have been shaking up the industry by lowering prices, by charging extremely cheap prices for their transaction services. And something like PayPal is competing against them and also competing against others. All of them are at the same time trying to compete for all those customers by lowering prices, lowering costs. And at the end of the day, the brand power can only do so much. And really, another criticism I levy towards PayPal is the bulls will say, well, a lot of transactions, and PayPal will say this too, a lot of transactions won't happen if you don't have the PayPal branding or name behind that. And in fact, the white label product from PayPal, though, is one of the fastest growing business segments and slowly becoming one of the most important business segments for the company. And that's actually come under a little bit of question as of late. So with that being said, that's kind of also dinging the prior point, saying that the PayPal brand is so powerful, you really want it on all your websites. But then the white label business is kind of countering that point. If customers, their technical customers, which is the people asking them for their product on their website, are asking for the white label product and not the PayPal product. But anyways, I digress. You can get a lot of the same protections with your bank, something like an American Express, Bank of America, Chase, etc. A lot of the purchase protections for fraud exist on your credit card. So I don't quite get anymore what the purpose of PayPal really is. In fact, I'd say that PayPal sometimes is more of a nuisance to go through than really directly with my credit card provider. But I guess you might disagree, and let me know down in the comment section below why I'm wrong, and kind of explain that to me a little bit more. So let's go through the earnings slide presentation. I'll cut right to the chase. This is the one from 2022. I'm going to show you what they were like back then and what they are like today, showing you their highlights there. They can see the growth 6% in active accounts. I'm going to address that, why that's important in a second. Total payment volume 340 billion, and we see free cash flow increasing and all that jazz. Now let's go over to this quarter, the most recent quarter, and I want to go to that same slide, which is right here. And you can see what's missing. Well, let's go back. The active accounts is missing because that's not very impressive this time. And you can see that the transaction volume or total payment volume is at 377 billion versus the 340 billion. This is the single most important metric or KPI for PayPal, because they are like a toll road. They take fees. The more dollars that travel through their system, the greater chance and opportunity they have to generate a toll on that capital or cash flow, and they can generate more earnings. Now, you can see that free cash flow. They had the negative impact from European BNPL loans originated held for sale, et cetera, et cetera, et cetera. So if you take that out and you exclude the impact, it's 4.9 billion. So I'll accept that actually. And you can see they're producing a lot more cash flow. So very positive from that standpoint. They're becoming a more efficient business. And granted, this is the direction we want to see. I will talk about one of the more important moves that they did. And by the way, this is on an annual basis. You can see they have 400 million active customers, 35 million merchant accounts. You can see from the prior year, they didn't really grow too much. And that's, again, part of the ding on the company right now. And if you don't think that's that much of a problem, then you can kind of look past that. But that's adding to the current narrative, countering the PayPal bulls. Now, we'll show you, actually, we'll kind of talk about this, but these are the benefits that PayPal says that they have within their portfolio of assets. So I want to get to the more important slide, which is this one. So this slide is more important than you think. When this happened, I talked to the community about it, and I said, this is the direction I wanted PayPal to go into. I did not like that they were getting into the buy now, pay later network, so to speak. I did like one thing. I want to not dog on PayPal too much, but let's compare them to something like Square, which I'm going to praise Square first, and then I'm going to criticize Square. My praise for Square comes from what they've done with Cash App, which I think blows away something like Venmo. I think management team at PayPal have wholeheartedly dropped the ball on Venmo. They've rested on their laurels, because it's not like Venmo's completely gone. It's just that Venmo could be way better than it is, and they just need to take the ideas from Square's Cash App. If they move in that direction, I think that Venmo has a bright future. But right now, Cash App is dominating Venmo. It's going to continue to dominate Venmo because I see it offers a lot better solutions than Venmo currently. And I see, again, taking share from Venmo. I don't see PayPal moving in the right direction. But let me criticize Square now. Square purchased a buy now, pay later platform. The name escapes me right now. But they purchased it for an egregious valuation, where at the time, I think the loan origination growth was around 40-ish%. And then it quickly dropped to 6%, showing me that management really didn't do a lot of due diligence, as they should have in purchasing that. And I think they could have grown it organically. PayPal did not buy a company like Affirm and instead elected to grow it organically, which I think was the right move. And here we are seeing, again, the fruits of the labor that they did, and they grew it organically. They didn't overpay for, I would argue, a crap company. And in this case, PayPal was able to also show investors, hey, we're able to monetize these assets. These aren't assets that are sitting idle on our balance sheet. We're also able to pull cash from them and redeploy that capital elsewhere where we deem fit. And this transaction with KKR proves exactly that. So this is a huge deal, okay? And it shows me that management is moving in the direction I would like them to, okay? I don't want PayPal to be a bank. If I'm thinking about investing in PayPal, I'm investing in a fintech. I'm investing not in a bank, but a fintech. And I want them to be nimble. I do not want their balance sheet bloated with a lot of debt. I don't want them to take on credit risk. I don't want duration risk. I want you to move money from point A to point B and take a cut. Okay, that's what I want from you, and make transactions easier. KKR coming in here and showing us, or PayPal showing us, hey, I can monetize those assets. I can alleviate the assets on the balance sheet and become an asset-light business model. Again, perfect. Love it. Love it. Love it. Love it. So I know that to many people, this slide doesn't mean anything. This deal doesn't mean anything. To me, it's a huge deal, okay? Because I did not like PayPal moving in the direction of becoming more of a bloated little bank. And that was actually one of the reasons why initially I was avoiding PayPal. I didn't like all the stuff that they were doing. I think they were moving away from what they were supposed to be. So again, that's kind of justifying that point. Now I can kind of show you here the growth and all that, but I'd kind of bore you with stuff I've already talked about. Everything's kind of up and to the right. Revenue growth is slowing down. Again, part of that narrative, why is revenue growth slowing down so much if the TAM is growing? It's because competition is fierce. You're in a place, where a competitive landscape where it's a race to the bottom. Now, again, like I said, the price point where previous content creators were talking about, where this thing was a value, I know they were sucked into the hype train. Maybe content creators you're a huge fan of that you think have really good education in this space and they should know better, et cetera. And I don't know what happened. Personally, I don't know what happened because I know some of them hold accreditations that are really well respected, and yet they said the things that they said about PayPal stock. I don't know. I can't tell you. But moving to today, we're looking at PayPal at $61.54 at the time of filming this video. Is it interesting? Okay, let's answer that for myself. So I kind of basically plugged it in already, and to kind of just illustrate, yes, it's actually quite interesting depending on the level of growth you're expecting from the business. Now, you might argue that I'm being a little bit pessimistic, okay? So that I don't think I am. I think I'm being quite reasonable. And so I think that if competition ramps up, I don't see a high double-digit growth rate. So I'm foreseeing somewhere along the 10% growth rate, and that puts it at about a $60.52. Now, that's not the price that I say, oh, I have to only buy it at that price. No. That's just kind of penciling out where we are in the current valuation. And as of now, I think that that's a fair value point. Now, some of the points I kind of want to note is if this is kind of assuming more or less a longer term cash flow margin of somewhere around the 20-ish percentile or 20-ish%. And so that if that doesn't play out, this is actually still a little bit overvalued. Now, if the competition or they surpass the competition and they're able to reaccelerate growth, then this value right now is attractive. This is assuming they grow more or less in line with the addressable market presented and competition is fierce. So this is a fierce competition ahead of them price point. So I'll say it this way. PayPal management team, good management team. We're seeing a transition of the CEO. They could be better in a couple key areas. Again, one of them, let's rehash everything. Venmo, they could improve Venmo. So management team, if you're listening, improve Venmo. Just copy Cash App's lead there and look no further than that. With broader PayPal, you guys are doing a good job, it seems, on the white label product. You guys are doing a decent job in cash cowing the legacy businesses from PayPal. I would say stay away from any controversy if it has yet to be said. Stay away from controversies regarding politics. Just do your business. Avoid any bad light onto your brand. That's kind of one of the key pillars of strength you have. You really don't want to mess with that, especially in the payment space. And then also from a buybacks perspective, they have been focusing on buybacks as of late. So you can see the share counts have actually been reducing. So I think that's an appropriate return of capital to shareholders. And if you think the share price is cheap right now, you want them to be buying back shares. For the record, they have been focusing on cost-cutting measures as well as a lot of other companies. So efficiency is top of mind there. I will kind of push back and say, you don't want every single time for businesses to cut everything possible. You want them to be focused on the more important cost-cutting measures. So that being said, what I'm going to be doing with PayPal is potentially, if I have spare capital and there's not other opportunities, which I think there are decent amount of opportunities out there, I would kind of foresee deploying some capital into PayPal at these levels. I think that the price point is fair given all the risks. Now, my price or valuation is incorrect if the following happened. If new competitors, if because I haven't modeled that out, if new competitors really ramp up and really crush PayPal's growth, something to an anemic growth or even a negative growth rate, that would be very problematic. Another thing that could cause problems for PayPal in the near term is some sort of large recession that would lower the total payment volume on their platform. So thinking about that, that would readjust the levels that we would kind of model out within each given year, and that would change the valuation. Or it could even present a really strong buying opportunity if the previous issues aren't there, but there's a short-term sentiment hit. Now, I would argue right now there's a sentiment hit implied in PayPal. So right now it's not looked at quite favorably. I would also address the following. So I posted this on Twitter/X. By the way, if you're not following me on Twitter/X, go ahead and follow me, and you'll see my occasional tweets. So what do you notice is number 4? And by the way, shout out to Dan for actually sharing this visualization with me. Number 4, PayPal. Oh, what is this? The retail ownership. So you can see right there, right above me, retail ownership is sitting at roughly 23.98%. So this is a very favored retail stock. A lot of retail investors are in this. And in fact, the greatest investor of all time, the one who has been able to pick many companies that go to zero, is actually said, again, easy money stock. So just on that note, I get a little bit cautious here. Something is off, right? So I have to take a step back and be very weary of it. So that's all I'll say for now. If you made it to the end of this video, I want to thank you guys for watching. And if you liked it, go ahead and feel free to leave a like, subscribe if you want to watch for more content in the future. And if you want to, you can check out the community down in the description below. There is a 1-week free trial. In there, you get access to the research that we do, me and the team. You get access to 2 private live streams a week. One that it's just me, and another one that is with the team where we present pitches. And you can also check out the write-ups in the community, the investment write-ups in particular, as well as the holding company portfolio that shows you all the stocks that I'm buying, selling, etc., and showing you a lot about how we strategize or PM a portfolio. With that being said, thank you guys so much for watching, and I'll see you guys on the next one. Bye.